all currencies have a lot of debt. And so when you look at one relative to the other, there will be a lot of printing.
Billionaire investor Ray Dalio is concerned about the potential for a stagflationary economic backdrop to occur in the middle of persistently high levels of inflation and increasing interest rates. Hello and welcome to Wealthy Value. In today's video, head of the world's largest hedge fund Ray Dalio speaks about high inflation rates and debt piling on the U.S., chances of an upcoming recession, currency crisis, and redistribution of wealth. Make sure to stick around till the end of this video, where Ray Dalio predicts that a new world order is coming. If you like the video, don't forget to give the thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
So when we talk about markets and the economy and all of these things, we have to realize, for example, that there's a great internal politics, populism of the left and populism of the right, and the polarity is becoming greater. It's entirely possible that neither side accepts losing the 2024 elections. Internal conflict will have a big effect. It's funny because, everybody says, okay, there'll be 7 increases or something like that, and that sounds like a lot. But you're taking interest rates up to something like 2%. And that 2%, which starts to squeeze the capital market, starts to make it more difficult for a holder of equities, because the equity, when you raise the return on bonds and you raise the return on cash and you tighten money, then that makes other assets less attractive, such as risky assets, particularly long duration assets like tech stocks and the like. So you produce that squeeze, yes, but that's still only at 2% or a little bit over 2%, with an inflation rate which is considerably higher than that. We've had a 7% inflation rate, and we'll probably settle, it'll be a 5%-ish or something. And so you're still losing that money to inflation. People are. So what you have is enough tightening by the Federal Reserve to deal with inflation adequately is too much tightening for the markets and the economy. So the Fed is going to be in a very difficult place a year from now, as inflation still remains high and it starts to pinch on both the markets and the economy. If you're borrowing more money than you're lending and you have a lot of debt, you either are going to pay back in hard money or in soft money. And so it creates a very difficult trade-off. So what can you do? Do you spend less money? So that the trade-off becomes more and more difficult, and that's what brings about a stagflation environment. You pay it back in hard money, or you pay it back in soft money. You pay it back in hard money, and you have a problem. You have a depression. So throughout history, whenever that was done, pay it back in hard money. Eventually, that was abandoned, and you print money. That was what 71 was. That was what March 1933 was. And so I think that what you have to think about is the value of money. How much money does one have in debt instruments? And do you want to own that as an asset? I think they're bad assets. And so, and then how do you diversify? And the system also has to deal with what is money? What is money? Is the dollar going to remain the same sort of reserve currency? And then you see the development of alternative monies. We're seeing a variety. I think different types of money will compete with each other in the environment we're in. Maybe it's crypto, maybe it's gold. We're going to come into an environment, because everybody thinks that think about how much money is being stored in debt instruments, those debt assets. All currencies have a lot of debt. And so when you look at one relative to the other, there will be a lot of printing. I mean, currency equals debt. And when you hold a currency, you're holding a debt instrument. And so all of those will decline in value relative to other things. Now, will the dollar decline more than other currencies? It's almost certain that we're going to come into this environment. We're in this environment in which there's a shifting of those currencies. So you're going to see more of China's renminbi being used. You're seeing India have a direct link with Russia on the currency. So we're in an important change in the currency. But how that is a store of wealth is a different question. So a currency is a medium of exchange and a storehold of wealth. And its storehold of wealth is now a problem, particularly for the dollar, but it's also a problem for other countries. So that's why you have inflation. As money goes into other things, and the cost of borrowing is so low relative to the inflation rate, then it encourages the borrowing of money and the sale of money. There's a whole relationship between cash, bond yields, and equity returns. So every investment is an exchange of a lump sum payment for a future cash flow. And so the cost of money is a consideration based on relative to the return on money. And so when we look at that return, when we say I can hold cash or I can hold a bond, that changes the inclination to hold cash. But also, one has to look at the expected return on equities. In other words, one calculates the present value of future cash flows. You estimate. So no, it's important to take a look at that relationship, that yield curve structure that way. But you should go beyond that and include the returns of other assets. What can you do in the way of generating returns relative to the costs of money, the relative attractiveness of those instruments? You have to have an economy in which the people believe that you have a fair system, and you have to have productivity. So I would say the most important thing is the redistribution of opportunity to make people productive and to eliminate the internal conflict, or to reduce the internal conflict, which can be so disruptive. When you see large wealth gaps, and at the same time you see economic problems, you have a lot of internal conflict, and that internal conflict is bad economically and it's bad socially. So yes, I think but it's not just the wealth gap, it is the productivity level that results. So the wealth gap is a problem, the opportunity gap is a problem, the productivity that allows, and productivity can be measured in what you earn relative to what you spend. So yes, all of that, that gap is an issue, and it's certainly going to be a political issue.
Recently, Ray Dalio also predicted that a new world order is coming, along with predicting increasing confrontation and even conflict between the existing dominant power, the United States, and the rising great power, Communist China. His analysis concludes that we are in a period where burdensome sovereign debt, massive money printing, and large wealth gaps will likely become further exacerbated. On top of the geopolitical component is the simple fact that the yawning wealth gap in the United States and the growing popularity of socialist politicians put a stronger incentive on corporations and politicians to provide better public infrastructure and services in order to improve the general standard of living. So if you agree with Ray Dalio about inflation and its impacts on global economy, tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.